Welcome.
Thank you. Thanks for having me.
Oh, thanks for joining us, mate. I've been wanting to have you on our show for a long time. And for the very few people that don't know, actually, people may not know who you are because you're the man kind of behind some of the scenes with data.
Yeah.
When it comes to property data, what you and your organization provides is probably, I think, one of the best in the industry. But before we jump into that, let's learn more about Tim.
Yeah, sure. Well, I came from country Victoria, a little town of 1,100 people, a quiet little town called Yea. And basically did my schooling, went back there, never had any interest in university. But my parents grew up, I grew up in my parents' pub. And as soon as I finished school, all I wanted to do
Grew up in a pub?
Yeah, grew up in a pub.
Cool.
Parents had a pub.
Very cool.
And but
Any
I had
wild
great
stories?
probably not so much when I was a kid, but plenty after that.
Yeah.
But all I wanted to do once I finished school was go back and work in my old parents' pub. And they'd already sold it by that stage, but I was adamant I wanted to be a bartender, and that's what I did. So for 12 years, I was in hospitality. I ended up owning pubs and cafes and things like that. We won Best Restaurant, Country Victoria, a lot of awards for accommodation and things like that. So that was pretty cool. And then after 12 years in hospitality, I decided I wanted to hear about what these things called weekends that people were raving about. I hadn't seen them for a long time, and I had the moon tan. Not that I've got much more of a tan these days, but I just hadn't seen any sunlight for 12 years. So I thought it's time to go and do something else. And this is back before Seek was around, so I was looking through the Herald Sun for jobs in the paper, and there was a job advertised for an in-home consultant. I had no idea what it meant, and I thought I'll give it a go. And that's where I met Chris from Reventon.
Previous guest of ours.
Previous
close
guest.
friend of mine.
Great friend of
Exactly,
ours.
good
He's
friends.
a beautiful person.
Yeah, so anyway, I applied for this job. I go down to meet Chris, hit it off, and I worked for him for 8 years. But what was
How
really
was it
good...
like working in that with Chris for 8 years? Because
Yeah,
Chris works long hours.
Well, long hours, but the thing is, he's a very generous man. Like not only obviously everybody knows about his philanthropy, but he's generous with his time. And coming into a whole new career for me, I'd never worked in real estate or finance. I'd owned one piece of real estate by that stage, and it was a block of land in my country town. So I didn't know anything about anything in real estate or finance. And Chris will still tell you I still don't. But no, he was really generous with his time and gave me an opportunity to really learn the ropes. And something I've always been is a bit of a sponge for knowledge. I wanted to know, my job as an in-home consultant was to send my customers into the office to speak to the experts. And I'm like, well, I want to be one of the experts. So what do I need to learn? So I did my mortgage broking diploma, went and did my real estate licenses, eventually went on to do my MBA and things like that as well. But I was really wanting to be valuable to the business and not just valuable in finance, but being able to step in any part of the business. And was lucky enough to be his national sales manager there for a while. And then an opportunity came up to work for a prop tech business called Investorist, where they were setting up offices all over the world. They were sort of like a wholesale version of realestate.com, connecting buyers agents, real estate agents with stock from developers and builders. And it was quite successful here, and then they wanted to move it overseas. So I was lucky enough to go out and work all over the world. And
How was that?
it was amazing. And
From country pubs to...
yeah, funnily enough, the only place I'd ever visited outside of Australia before I took that job was Fiji. I went on one holiday there.
Wow.
That's what hospitality does to you. You don't get away. And then in the next 3 years, I did 18 countries or something, and which was a lot
It was
cheaper.
like 93 flights in a year or something.
I did
think you
93
mentioned.
flights in 2018.
Wow.
Yeah. So it was a really interesting time. What those 3 years taught me, outside of just your great experience of travel, but in real estate and working in so many different countries in real estate and always on the buyer side, you get to understand what different cultures want and certainly what they don't want. So that was a really interesting time.
It's very different when you compare the Australian market compared to...
Well, I mean, if you look at Australia now, in terms of real estate, we've always had a listing agent on, looking after the buyer. Looking after the vendor rather. But in Australia, for many years, there was nobody acting on behalf of the buyer. And if you think about it, it's a very expensive transaction to get wrong. So it makes sense that you've got a professional acting on both sides. In the US, that was normal. And I lived in Miami for 3 years, and whilst I was doing all those flights, I wasn't there all the time, obviously, but
improving your tan as well.
yeah, exactly, for a little bit. But then made it back to Australia after 3 years and went and worked for Chris again. And at that time, it was just before COVID hit, and I could see that, we were doing a lot of new builds at that time. I could see the challenges we were going to have with the new builds with builders going broke and supply chain issues and everything. And we'd already started doing buyers advocacy because I knew that there was a market for that here. But then we really got stuck into it, and that meant that we could do a lot more established properties. It means, clients were settling much faster. We didn't have challenges with valuations. We were settling in the same market that we were buying in, and it became a really good product. And that's something that I've continued doing since, going and joining Hotspotting and starting my own advocacy business.
Which is awesome. And Hotspotting.
Yeah, I want to know. I mean, we've got a lot of questions to ask, but Hotspotting, tell us a little bit about that.
Sure. So if I go back to the Reventon days, I was always buying my data through Hotspotting. So Terry Ryder started that business back 20 years ago now. He actually was a journalist for Courier Mail and Money Magazine and a couple other big publications. And he was asked to start writing about real estate in a couple of those roles. And what traditionally happens with real estate journalists is they talk about what's happened. And one of his editors at one point said, why can't you tell us what's going to happen? Where should we be buying? So he had a column called Hotspotting, and I was talking about where the best hotspots were to buy. And it became very successful, and that's where the business was born. So for many years, I was buying his insights. And the reason I really liked what he was doing is they were forward-looking indicators. They were saying, what's likely to happen in the future, not just what's historically happened. And I suppose where Hotspotting is different to, your big data warehouses like your CoreLogics and Price One Domain and SQM is we don't just deal with real estate data. We ingest demographic data, population trends, infrastructure trends and things. So we combine all of that. And last year we won the Australian AI Awards for innovation. And it's because we use machine learning to sort of, ingest this and then create, remarkable insights that show us what the future could hold. And we never claim to have a crystal ball, but our results, like last year, the national market grew by 5%. And at the start of every year, we pick 10 LGAs we believe will have the best capital growth. And we've always got a long-term view on that. But even the first 12 months, our worst performer did 11%, and then 9 through 1. So the other 9 did between 15 and 29% capital growth. So
that's crazy.
Yeah.
So Hotspotting is known for identifying high growth areas before they boom.
Yeah.
How do you find that information? Like, how do you and your team spot these opportunities?
Yeah, there's a number of different ways. We've got a couple of proprietary formulas that we use, but one of the simplest versions is we actually look at a lot at sales volumes as a bit of a precursor to growth. It's a pretty simple methodology, which we combine with other things which we'll talk about in a moment. But if you think about supply and demand, rising sales activity shows rising demand. And what happens is growth tends to follow that same trend. So if we see rising sales activity in an area, then we often see price growth. And if we see sales activity declining, we often see prices soften. So to put that in today's terms, we believe Perth reached a peak in the market. And if I go to look at some of those most popular LGAs, they've gone from 320 sales in a quarter to March that's just finished was 92. Right? But prices haven't really started to taper off just yet, but we believe that will happen very soon. So it's a bit of a lead indicator on price movement. Now, we can go and have a look at rising markets all over the country, but you wouldn't just go and buy in every rising market. Obviously, you want to look at the local economy. Is it diverse? We want to look at minimum market size and minimum population size. We think population's a really big one. We always look at locations where they've got good existing amenities in terms of infrastructure, but we want to see future infrastructure coming to the area, whether that's road, rail, hospitals, big business moving to the area and creating new employment opportunities. And the other big one is low risk, right? So we look at areas that, in terms of industry and say, what happens if that mine closed down? Where are you left with your investment? You don't have any tenants, and property price is going to drop. Areas that are propped up by agriculture or just tourism become quite risky. So we avoid those locations. And then lastly, what I would say is the term hotspot, Terry's always said he wishes he never called the business that now, because a lot of people think the term hotspot is a flash in the pan of quick growth and then nothing happens after. And people often think that they're quite rural locations, but a lot of the hotspots we choose are still in capital cities. And we always take a long-term a view whenever we put a location into a hotspot report. We believe that that's a long-term thing, and anything we get short-term is just a bonus.
What about right now? What are the current hotspots right now?
Yeah, right.
I hate using the word hotspot, but what are they?
I mean, we use it because it is a hotspot. It's a hotspot for people to be buying in, but we don't want people to believe that it's something where it's going to get a short lick of growth.
Of
and then that's
course.
it. So right now at the top of our list is the Sunshine Coast in Queensland. We call that a second wind market. Had extreme growth through those COVID years, and every market's cyclical. So they go through a big spike when they're hot, but then eventually they'll reach a bit of an affordability cap and they'll start to settle. It's had that for a couple of years now, and the sales activity is really starting to take off again. Massive infrastructure pipeline going in to that area, obviously off the back of Olympic Games and things for 2032. So we believe Sunny Coast is probably one of the most exciting markets. The other one that's a surprise for a lot of people is Darwin. If you look at
Wow.
Darwin's had many years of not much going on there, and something that we get asked all the time, or people may challenge sometimes. They go, "Why would you pick a market that has never performed?" And my answer is always, would you like me to tell you about after the growth or before it?
So true.
Do you want to wait until it grows and then buy? I'm telling you buy now because it's about to. And we can see that already in, we've been saying that, I think it's been in 3 editions of our Best Buys now, which is quarterly. So we've said for the last 9 months, we believe it's starting to turn. We're starting to see that in price growth now, vacancy rates constricting, and 3-month growth, it's already starting to pick up. So I think it's going to be a really, if we look at where a lot of investors were targeting Perth, I think Darwin's the next one.
Interesting. What about? Oh, sorry. I forget that Rex is actually part of this as well, and it's not just me talking. So I'm so sorry,
Go back
Rex.
to your congratulations, AI awards.
Yeah, congratulations.
And innovation. You get this data, and AI is such a big part, and you've got access to not just property data, but immigration and a lot of extra data.
Yeah.
And you put it together with, we mentioned use of AI. How does this work, and who verifies, and how do you know? And the data you're producing, obviously the end result seems to be working.
Yeah. Look, it's an interesting one. I think as soon as you start to talk about AI, people think that you're, doing away with all the human element and relying purely on computers, and that's not it. AI doesn't make our selections. What we use AI for is back testing. So we'll go and we'll say, right, if we perform this test and then go back in 9 months' time, what would have happened? And we actually learn how to tune the algorithm that way. Oh. So that's part of it. The other part is that as an example, our price predicting index, every quarter, my team, we sit down and we give every suburb in Australia a ranking as whether it's rising, declining, etc. And what that means for consumers and anybody working in the real estate industry, you can say, well, would I like to sell my property if it's in a rising market? So I sell it today and then all of a sudden it shoots up? No, of course not. Would I want to wait until I can start it seeing to peak before I sell? Absolutely. And then likewise, if you wanted to sell your own home, do you want it to be in a rising or a falling market? So there's a lot of insights that you can create from that, but you can imagine there's 15,000 suburbs in Australia, and then you've got house market and unit market. So 30,000 markets to choose from as an investor. And we've got to go through every quarter and give a ranking on that. So you can't do all of that on an Excel sheet, although Terry did do that for many years, every suburb. So now what we use AI for is, that report used to take us 9 weeks to produce, and now we can produce it in 2 hours. Wow. Right. So AI really speeds up our process. But the other thing that it does is we use AI to get rid of the noise, right? So we say, don't show me anything that sits outside of this, right? So that might be, I said, minimum market size. I want to say minimum 50 sales in an area. Otherwise, it's a suburb that's statistically not reliable. So we're just going to omit that from our research. Then we use like population size, and we can start to really cut out all the noise so we can focus on what's important.
Awesome. This would be such a valuable tool for a lot of estate agents, but I don't know many estate agents that would. I mean, advocates, I'd understand you'd hope they'll be using data like this.
Well, they're biased. They're not going to say their market's not performing if they're an agent in that market.
But they'd also be able to say if it's the right time to sell, hold.
It's always the right time to sell in real estate, isn't it, guys?
I'd like to sell my home. No, it's not a good time.
Call me next year. No good.
This is all true. But it's also data that I think like every estate agent should have a general understanding of. And even if they're going to go prospect, obviously if they're going to get a call, yes, sell. But if they're going to go prospect, if you have this data, you can go and say, this is a really good time to sell.
Yeah.
It's going to go backwards based on this data. But
yeah, absolutely.
I don't know what your subscriptions are like, but I don't know many agents that use Hotspotting. I know advocates do.
We're very much more on the investment side. There's no doubt about that. We've got a lot of real estate agents that do use the platform, but use it for other areas. So use it some of our marketing things, and we've got valuation tools and all sorts of things like that. So, or calculators and all sorts of resources. But definitely we cater more to the investors. So.
In regards to hotspotting or hotspots, what are some of the most common misconceptions you find that people, I guess that they're not aware of?
Look, I mean, if I think about just an investor at first, of investors, consumers also. So investor consumer, they're quite a fickle bunch, right? So what tends to happen is there's an interest rate rise, they run away for 6 months, you just don't see them, right? Whereas the B2B side of our business, which accounts for 80% of our business, are there all the time. So I see different behavior on both of those, with both of those different audiences. So the consumer, a lot of time they look in their backyard, right? They'll look at areas that they already know and they feel comfortable with. Whereas when you go to a buyer's agent, they're quite comfortable, recommending cross-border transactions and saying, look, we've got people on the ground in this location. And, I'll give you an example. If you're here in Victoria right now, and I'll tell you, my last investment property I bought was in Albury, Wodonga. So Albury is New South Wales side of the border. Victoria is Wodonga. I paid $570,000 for a property renting at $600 a week. I paid $25,000 in stamp duty in New South Wales. If I bought that same property 2 minutes away in the other side of the border, I would have paid $35,000 in stamp duty. And my land tax in Victoria starts at $50,000 when the land value was $50,000. In New South Wales, it doesn't kick into $1 million. So my holding costs are far less, just being 2 minutes north of the border. So buyers agents don't just help you find a good property. They can help educate you on the different laws and states, what's happening in the different states to make sure that the investment works well for you. It's not just always about the growth hotspots. You've got to take into account your out-of-pocket holding costs and all those types of things. Insurance is a big one. Lots of agents out there, talking about a lot of locations, North Queensland, and getting fantastic gross rental yields. But by the time you take into account your insurances, the net yield is actually pretty poor. So for a lot of consumers, they need to understand that when you are looking at investment, you can't just look at, how much rent am I getting? It's how much are you left over with? So I think that's a big one.
With yield and capital growth, can you get both?
Absolutely. That's a really good one. So people often said you have one or the other.
Yeah.
We've got a report we call the Pulse, which is, we release every quarter, which is the top 50 locations around Australia where you'll get above average rental yields, which is 6% and above. And they've still got really good prospects for capital growth. So, we've been, all of our focus is always on growth. Like you can't, when I say that, later in life when you've, asset rich and maybe cash poor, you can focus on those higher yielding ones. But what's an investment without growth? Like at the end of the day, if I can give you a couple of $100 per week in your pocket, that's not going to change your life, but a couple of $100,000 per year will. Right, so you always need growth. So we'll always focus on that. And there are markets around the country where you can get 6, 7, 8% growth and still get really strong.
And where are those markets? Can you share?
Yeah, well, Darwin's certainly one.
Oh yeah, obviously Darwin. So you can get growth and yield in Darwin.
Absolutely. I'll give you another one. I'll give you a little trivia question here. If I asked you, so there's 14 different jurisdictions in Australia. You've got 8 capital cities and 6 regional markets. Out of all of those jurisdictions, over the last 20 years, which one do you think would have had the best capital growth?
20 years.
20 years.
20 years.
So you've got Melbourne, Sydney, Brisbane, and then you've got your regional markets, your Gold Coast.
Sydney's boomed so largely that I would assume Sydney.
WA.
What if I told you it was regional Tasmania?
What?
Wow.
In the last 20 years. So we've got, I've been helping people buy houses in Tasmania over the last 12 months for $300,000. When they've got low budgets, if somebody's got a budget of 800, we don't go to, a $300,000 purchase. But for those wanting to enter the market, get some good capital growth and positive cash flow, it's a ripper. So some examples, right now we believe the city of Burnie is a really good opportunity there. It's only small.
That?
So if you go Launceston at the top, like northern Tasmania, go across to Devonport, then you've got Burnie. There's 2 ports. So you've got the port of Devonport and you've also got the port of Burnie. Population of about 20,000, really strong infrastructure going into that area. But you can buy, a solid brick home for $300,000. Right?
No idea about it.
We did one the other day in Launceston, $615,000 for a modern 5-bedroom home, renting at $680 a week. Right, and these are markets will get double-digit growth in the next 12 months, I'm sure.
Wow. And this is part of your, because you got the advocacy service as well. So
it sits outside of the hotspotting business. It is, when I joined Terry at Hotspotting, Hotspotting is my number one focus, don't get me wrong, but I've always been, in the buyer's advocacy space. My brother joined the business as well, and he does buyer's advocacy. So we do get a lot of people that, through relationship we had and referrals and things like that, that they still want us to help them, because they say, it's great you've shown me where to buy, but I don't have the time, the know-how, and knowledge, right, to do it.
You got a one-stop shop.
Yeah, exactly.
Makes complete sense.
Yeah.
Do you
But
see?
your acquisitions will be based purely on data, I'm assuming, like
Yeah, absolutely.
first-hand data that you've compiled. Like
Yeah.
most advocates will be buying your data, then trying to apply it.
But then you get the data and you know the area, but then, do you buy established? Do you buy off the plan? Do you buy Victorian home? Like what, do you know what I mean? Like, I guess that's when the buyer's advocacy arm really comes into play here.
I'll give you an example. Terry Ryder's been in this game for 40 odd years, and every time he buys an investment property, he doesn't do it himself. He doesn't lack the knowledge, but he lacks the time, and he also likes having a second set of eyes to look at it. So, when he comes to me and say, Tim, I'm ready to buy another investment property, what's the budget? We go through it and we do it all together.
It also
do it
takes the
different to a normal
emotion
customer.
out of it though, because I think as much as we all say that we're not, it's an emotional purchase. So if you can have someone remove that emotion and it's purely logic and numbers, it's just going to be such a stronger sale.
Opened your eyes, like some of the suburbs you've mentioned today. I would never have thought.
No, that's
Never.
right.
I would never have thought Tasmania, ever.
Yeah. And look, I think that's a daunting thought for a lot of people to think, why would I buy somewhere I've never heard of? And as I mentioned before, a lot of people say, if they see that the place hasn't grown historically, it's like, why would I buy there? And if you took that same mentality into Perth 5 years ago, you would have missed that boom. If you took that same mentality into the Sunshine Coast back in 2017, you would have missed that huge boom there too, and maybe this next one. So it's important that when we are looking at this, people understand that the reason we're selecting them is because we can see change. Change is the reason that it will go from a non-performer to a performer.
Interesting. What about, do you see, since I guess post-COVID and remote work, have you seen a bit of a shift in the property market since then? Like less people wanting to buy in a city because they don't need, I guess, the transportation to be close by to get to the city, remote work, post-COVID. What does the property landscape look like now?
It's a good question. Funnily enough, if you read the papers, they'll tell you the reason that people are all moving to the regions is because of, COVID and the
Remote work.
But it was happening well before that. We call it the exodus to affordability. These capital cities are becoming very unaffordable for a lot of families. So they've been looking at that affordable lifestyle in areas like your Geelongs, your Gold Coast, your Sunshine Coast, and even your Newcastles. People have been moving into these regions because they like the lifestyle aspect, but they've got really strong road and rail networks to get back to the city to see family and things when they need to. Really good hospitals and, sporting and everything that they need for their family, but it's at half the price that they've got of a mortgage here in the capital city. So it's been happening a lot, and we don't see that changing.
So does that mean that inner city properties will lower in price, or do you think it'll continue to boom?
No, some of the immigration trends show that when people first move into Australia or come to Australia through migration, they often land in the capital cities to begin with. And they've also, for a lot of those demographics that are moving here, they're probably coming from an area where they're used to high-rise living and more higher density. So it's not uncommon at all. And we don't see, we've got such a housing housing crisis here at the moment that we can't see that changing anytime soon either. So one interesting thing that we've been quite public about over the last couple of years is that economists keep on saying that the real estate market's going to crash. When COVID hit, there was I was talking 20-30% drops, and what actually happened is we grew by 20%, so 50% wrong. But then same thing happened when we started to see interest rate rises. They said property market's going to crash. And all through all of this, and wars breaking out, and tariffs, and whatever you want to throw it is, there's a reason that Australian real estate's not going backwards, and it's because it's a necessity. We don't all need Tesla shares, but we need a roof above our head.
Totally.
And we haven't got enough of them. We can't build enough of them. It's the median price to build a new house and land package in Australia is almost $1 million now, and 40 to 50% of that is actually going towards taxes. So until we can fix that problem, property prices can't go any direction but up.
Well, speaking of property prices, what advice would you give to the younger generation coming into the market that are filled with uncertainty and fear?
Yeah, look, I think first and foremost, I think the idea of home ownership is such an important thing for Australians, but I don't think they realise that you need to do it that early as a homeowner. I think rentvesting is something that people need to explore.
That's my
a
next
lot
question.
more because,
Rentvesting, yeah.
You know, I'm a rent investor myself, and for my wife and I, and we've got a couple of kids. You know, the house that we live in, we'd be paying $15,000 a month as a mortgage. Instead, we pay $4,000 a month to rent it. You know, that's a huge saving. Now, granted, you know, we could be told you got to get out and move if the owner wants to move in there. So be it. That's the risk we take. But at the same time, we can invest our money in multiple locations around Australia to grow our wealth, and eventually we'll buy into the location that we want with hopefully a very little mortgage, because it's that owner-occupied bad debt that stops us from being able to do anything in the future. And
There's no tax savings.
no
or
tax savings at all.
advantages.
You're
You get
100%
to maintain
liable.
the lifestyle that you want as well without
Exactly.
sacrificing, I guess, your ability to invest.
The other thing is that every time you, let's say that you do the traditional method, you buy a home, you maybe stay in for a couple of years, then you do it a reno and you sell it and you go and buy again. You know, you're never buying something cheaper. You're always going and increasing the mortgage and keeping up with the Joneses. And it just means that we end up, you know, in debt for so long, right? And every time you sell a property, you're buying in the same market. You know, the house that you bought over there used to be this price as well, you know. So, you know, the thing with rentvesting is it does give you that flexibility where we can up and leave if we wish to. You know, we accept a job overseas, up and go. You keep your investments. Every time you buy and sell real estate, there's a very expensive transactional cost to that, whether it's stamp duty, paying agents fees,
Both.
Capital gains tax. It's a very expensive exercise. Whereas if you rentvest, you know, I can move around, we can you know, choose to live in different locations if our circumstances change, and the whole time we can maintain our assets.
And your returns normally probably better too.
Yeah, that's exactly right. And you get the diversification. I mean, right here in Melbourne, it's funny, people talk about, you know, the Australian real estate market. There is no Australian real estate market. There's thousands of markets in Australia, and they all act very differently at the same time. You know, Perth grew by 15% last year and Melbourne went backwards -3. So if you've got one asset and it's in Victoria, over the last couple of years, you have not done well. Whereas if you've got multiple assets, even if it's the same debt level, but it's across multiple states.
Same as a diverse share portfolio. It's
course
like
it is.
anything that you invest in, it needs to be diversity.
Yeah.
What about the next 5 years? I mean, the last 5 years for Australian real estate, I've never seen anything. I mean, I don't think any of us have seen anything like it post-COVID.
Yeah.
You know, inflation's, we've been thrown everything at us.
Yeah.
What do you predict for the next 5 years?
Look, I don't think there's any, there's no silver bullet for the housing crisis. I think that's probably going to be the biggest thing. I think rents have actually started to reach a point where we can't see the same sort of rental growth that we've seen over the last few years because the market can't support it. So what happens when you reach a point like that is the genetic makeup of our housing changes. So people start, you know, multi-family living and having more heads under the one roof. So rents are probably going to reach a bit of a peak and we won't see that same sort of growth. But I think that flight to affordability is going to continue. You know, if I can't afford to live here, where can I afford? And people will start to move. And Adelaide was an example of that. You know, it's had 5 stellar years of growth, and it's hard to believe, but you know, Brisbane, Melbourne, and Perth are now, and as well as Sydney, are all higher median price than Melbourne at the moment. That's crazy.
It's crazy.
Yeah. And you know, on the subject of Melbourne, you know, right now there are buyers agents and investors piling into Melbourne, and for one reason only, it seems affordable, right? And I tend to agree, it does seem affordable. But when I look at how much it cost me to buy here, how much it cost me to hold because of the land tax, and then also the fact that our rental yields are much lower, I think your money can be spent better elsewhere.
So as an advocate, your advice is not to buy Melbourne.
Yeah.
Because a lot of advocates, as you said,
There's plenty of stock here. As an advocate, it's an easy job right now. I could come in here and get very good discounts because there's a lot of stock on market. People are selling up because they can't afford to hold the properties. But it's almost when you buy an investment property, you really want to get some good growth in the first few years. Melbourne's offering that in reverse at the moment. You can buy really well. So, and not just Melbourne, regional Victoria, you can go into Ballarat right now, probably buy a 5-year-old home cheaper today than what it was built for a few years ago.
But can't build it for the same price.
That's it. Well, you definitely can't. So don't get me wrong. There's plenty of opportunity here in Victoria. But you know, our biggest challenge that we've got here. I sit on the board of the Property Investors Council, and I'm the chair of Victoria. And I shouldn't be sitting here bagging out Victoria, but the challenge is we've got this incompetent government here, state government, that has reached a peak debt where we're going to be paying $1 million an hour in interest. Right, and that's going to come
$1 million an hour?
in interest, right? We've got more debt in the state of Victoria than every other state combined. And the challenge is the only way that you maybe there's a federal bailout, I don't know. But outside of that, the only way that they can start to pay that back, they've got to cut some jobs. We've got a lot of our infrastructure projects coming to an end this year, but they're going to have to start laying off a lot of public sector jobs. I noticed that they're starting to cull some funding in a lot of projects over the last week even. I've seen that in the media. So that's going to come at a cost of sentiment as well. And that's why I don't think we've actually ironically started to see some rising sales activity in Melbourne start to get into a bit of a recovery mode, but I can't see us, reaching peaks of, 7-8% growth anytime soon.
Drats. Shouldn't have bought in Melbourne.
This podcast won't be popular in Melbourne.
Sorry, I'm in a good area. No, I'm sticking with my decision. Speaking of wrong decisions, what are some of the biggest mistakes you see investors make or first investors make?
Look, first investors are typically, it's buying in their backyard, buying somewhere really close, somewhere they know. And, if you're living here in Victoria, that might not be in the same suburb, but it's still in Victoria, right? And for those reasons, if you don't open your mind up to what else is out there, you're missing, it's the opportunity cost that you could have been gaining in other locations. So that's the first one. The second one is, I think investors quite often don't like paying for professional advice, and it's a real false economy. Whether you were going to pay $15,000 for a buyer's agent and you decided to do it yourself because you wanted to save that money.
Imagine the savings you'd make or how much you'd lose if you made the wrong decision.
Exactly right.
Yeah.
But not only that, let's say that buyer's agent can get you something under market value. They pay for themselves instantly.
Totally.
But also, as you said, if they can prohibit you from making that big mistake, that $15,000 will feel very, very
but it's about
small.
trusting the right advisor too, because
Absolutely, and it's not just,
Totally.
don't get me wrong, it's not just buyer's agents, it's a mortgage broker, accountant, financial planner, solicitors, conveyancers. It's you've got to have a team before you build your portfolio.
Of course.
it's got to be based on data. A lot of them go off, inspections or whatever the case may be, but the data is what.
Yeah. Look, the thing that a good buyer's agent can do as well is you're paying for their negotiation skills. And I don't know how many times I've seen, jumped on an auction and, somebody's bidding for themselves and they've reached a peak and I'm thinking, is this property on the market yet? And then all of a sudden the agent puts in a vendor's bid and then the person who was the highest bidder goes and outbids against themselves. And I'm like, you're the highest bidder.
You're
Now,
go in.
a buyer's agent will never let that happen. Well, a good one won't anyway. So there's little things like that just consumers just don't know unless they're doing this all the time. So it's a real false economy to try to cut corners on good professional advice.
It really is.
Well, Tim, you're the expert here. What does your personal portfolio look like? Out of curiosity, and you don't have to share it if you don't want.
No, I mean, look,
We Rentvest.
Rentvest.
No, I know you Rentvest, but in terms of your investment portfolio, where have you got investments? What are some mistakes you've made, some successes?
I'll start with the mistakes. The first one, and everyone's gone, the first mistake I made, which was because it was before I started working in the industry, I bought a block of land in my hometown, and there's a reason in our data we rule out towns that have very small population base and not much infrastructure and, lack of diversity in the economy and things like that. Like I had that property for about 6 years and I think it may have grown by about $15,000.
Oh,
now,
stamp duty on it.
that's it. But the holding costs, I went backwards, right?
All right.
So, that was my first mistake. Now, I didn't make that mistake again. I started buying into, started working in the industry, started to realize that I could buy cross-border and things. And now my wife and I have got properties a couple in Queensland, one in Victoria, which she already owned, and then one in South Australia. I think that's it in terms of states. And then in terms of investment, well, I like shares. I invest in whiskey barrels in Scotland that are under code. There's lots of different interesting little investments.
It's very
diverse,
like which
diverse
is the advice that you give, yeah.
Yeah, exactly. You've got to practice what you preach.
I guess we're all buying in Tasmania this year, guys.
Sounds like
Yeah,
it.
do you want to go Harvey's?
It's funny though, real estate is something that people often talk about. There's a million gurus out there who preach real estate.
Yeah.
And something that I always tell people is you might see somebody who's got a lot of real estate and you see that they're wealthy, but not a lot of them made their money through real estate. Most of them made it through owning businesses. And I think that there's two things that I've sort of learned in the last few years, which from many years of working in the industry, I look at the business owners and where they spend their money. and where they park their money and things. And real estate is a really good asset here in Australia from a lot of point of views. One being tax from negative gearing perspective. The second one is you've got really strong growth opportunities and things, and low vacancy, so it's pretty low risk. But the other thing that I think with a lot of business owners is that I've seen over the years is that they don't just do one thing. They've got to have diversity across all of the different asset classes, because inevitably you're going to have bad years in some of them. And I think that's really important.
And having the appetite for risk as well.
Yeah.
Yeah.
Sound
Awesome.
advice.
Thank you, Rex. I should be an advocate. Yeah.
His advice, not yours.
Tim, this has been so beneficial. Thank you so much for sharing all of this knowledge. I know that typically people would come to you and this is part of your service, and you've given it to our audience for free. So thank you so much. Rexy, any final questions?
I think a lot more agents and individuals should look into hotspotting, because the membership's very affordable.
Yeah, memberships ranging from $300 a year to 15 grand a year if they're really top tier.
And it's not just for agents, for individuals like yourself. You know, you can
Absolutely.
join up and see.
Well, I've just been having this conversation. I'm on the market for my next investment. So this has been really beneficial to have this conversation with you, and more than likely we'll use your services after this and get hotspotting. But thank you so much. And I think for our viewers watching, if you're looking for that investment, Tasmania sounds like it could be a hot pick for this year. But I'll allow the expert. And Darwin, yes, exactly right. But thank you so much, Tim.
Thanks for having me.
Thank you so much. We'll see you on the next episode of Real Estate Renovators.